As markets gear up for Wednesday's FOMC meetings and hints of when tapering may commence, what price reaction are we seeing amongst the traders' favourite pairs? Malcolm Cauchi, COO of Sensus Capital Markets, joins me now. Malcolm, in your view, will Euro-US dollar be trading on FOMC anticipation or today's news that German unemployment has increased for the third month running? Looking ahead, what do you see as the drivers for your pricing forecasts? And also, we must ask, when are Sensus anticipating the beginning of tapering?
Well, yeah, right now the euro dollar is facing consolidation and is hovering around the 137.50 area this morning, ahead of the two-day FOMC meeting that will end this evening. Sensus expects that the Fed should start tapering its program now in Q1 2014. This means that a broad-based USD rally will have to wait until the Fed announces its tapering program. The market has been caught short-footed by expecting the tapering to commence earlier, for the September area, though the slowing housing market and sluggish economic activity gave fuel for the Fed to stand put with the tapering program. This obviously has made the pair shoot from 132.50 levels to the current levels we are seeing. And we expect the euro dollar to range trade over the near term with downside risks as the ECB retakes control of the short end of the yield curve and eases liquidity conditions through a VLTRO in the late Q4 of this year. And we believe that the Fed's decision to delay tapering may generate an even better environment for USD rally in Q1 2014. Although the German unemployment will have an effect, there's no doubt that the traders will be taking a very close look at the FOMC anticipation and any hints on how the Fed will move. By keeping the purchase program on hold, basically, there may be stronger economic activity at the day the Fed begins tapering, and therefore better conditions for a broad-based USD rally, including euro. Combined with further ECB measures to address the passive tightening in the late Q4 2013, this environment is likely to provide a powerful combination to get the euro-dollar moving lower. Meanwhile, we expect the euro-dollar to stay range-bound with a short-term upside risk towards 138 and grinding lower as the rebound cycle in the cyclical data disappoint and weak underlying growth trend reemerges. And therefore, our forecasts for 1 month would be 137.50. In 3 months, we are looking at 134, and in 1 year, around the 129.
Post-US shutdown, the pound sterling had been one of the few majors trading on its own data, opposed to US sentiment. Is this still the case? How do you see the cable relationship balancing out for the final quarter of 2013 and into next year?
Well, the UK surprised the market by producing stronger data than expected in Q3. Whilst the government shutdown in the US did not do any favors for the dollar, we believe that the good news is priced in at these levels and therefore expect some headwinds to pop up again, putting pressure on the pound. The Bank of England's monetary policy is set to remain loose for far longer than the Fed policy. And GDP weakness related to a rebalancing of the UK economy away from the services sectors towards tradable sectors is as relevant today as in the post-crisis period, basically. Just like the euro, we expect the pound to be stuck in a range against the dollar, as recent sources of support are set to hold steady. However, we believe that the current levels in the pound make case for a good medium-term short, and therefore my forecasts on this pair would be in 1 month 162.50, in 3 months 158.50, and in 12 months 154.
Dollar-yen traders will be watching the FOMC and Bank of Japan with equal interest, with Japan's rate decision taking place through into Thursday morning. While economic indicators are thus far supportive of this pair, what would you say to comments that resistance is not far off for the dollar-yen?
Well, we continue to expect dollar-yen to rise gradually in the medium term, driven by the relative growth and monetary policy outlook between the US and Japan. However, given the Fed's decision not to taper in September, we look for dollar-yen to rise modestly than widely expected. So we should be looking at about 100 by year-end. And the reason for this is obviously due to the Fed's dovishness and the stretched valuation for the yen. We still expect the Bank of Japan to ease further later on in 2014 when it publishes its semi-annual outlook report. And Japan's politics, though, is worth keeping a bit of attention as a risk factor in the coming months, especially over tax decisions such as consumption tax hike and the corporate tax cut, supplemental budget, and some structural reforms happening there. Disappointment on these fronts would likely to hurt investment sentiment and weigh on Japanese equities and the dollar term in the very short term. Tonight, the BOJ, Bank of Japan, is not expected to make any changes to the current interest rate or monetary base levels, therefore giving more weight on the FOMC statement tonight. Resistance levels are not too far off. However, we expect a continued gradual bullish momentum in the pair, with any corrections being limited given the degree of the challenges Japan faces at the moment. This leads us to believe and to come out with the forecast that in 1 month should be around the 98.50, 99 level, more 99, and in 3 months 100, as explained before, and in 1 year would go up to 104.
Malcolm, many thanks. Coming up today on Dukascopy TV, and Honda have missed growth estimates amidst a slowdown in Southeast Asia. Benjamin Jones will be discussing this story in today's press review, so don't go away.